The big development in New Zealand yesterday was the Reserve Bank's official cash rate review, and we did see a slight tick up in interest rates after that review, but the main movement was in the New Zealand dollar. The market interpreted the Reserve Bank's statement as a sign that interest rates rises would be coming towards the end of this year, and that was pretty bullish for the New Zealand dollar. Through yesterday and then overnight, the New Zealand dollar continued to strengthen against the US dollar, and in fact it touched a new post-float high, reaching up to 83 cents against the US dollar. Against the Aussie dollar, there was a bit of a double kicker. Firstly, we lifted half a cent after that Reserve Bank announcement in the morning, but secondly, some weak Aussie employment figures out in the afternoon saw the New Zealand dollar press even higher against the Aussie dollar on that cross rate. Now, we're up at about 78 cents against the Australian dollar, which in the grander scheme of things is still at the weaker side of the long run range that we've traded in against the Australian dollar, which is good news for exporters into Aussie, but it is pretty strong compared to the range we've had over the last few months. Now, we weren't the only country having an official cash rate review yesterday. The Bank of England and the European Central Bank both had reviews. No changes there, but in the case of the European Central Bank, they're still sending some signals that rate rises may well be likely as they deal with the twin forces of quite high inflation pressures, but the fiscal challenges in some of the struggling economies such as Greece. Those Greek developments are still taking centre stage up in Europe. Plenty of talk about how they're going to work out their fiscal problems there. Across in the States, we just had the weekly unemployment data, which was basically in line with the expectations. But we had a couple of Fed speakers, a lot of talk about the US housing market, which is really struggling these days. And earlier in the week, we had some mortgage data out of the States, which showed that despite the fact that long-term mortgages rates have been falling in the States, it's not stimulating any new borrowing, and that's a problem we think is going to be around for quite some time, that US housing market weakness, just like we think the sovereign debt concerns in Europe are going to be a big issue for a while. So with all of those concerns in the Northern Hemisphere, in some ways it's not too surprising to see the New Zealand dollar trading so strongly. Our economy, despite all the challenges we've got, looks quite reasonable. And we're actually picking that the New Zealand dollar can continue to press higher against the US dollar. Maybe we'll get up to around 85 cents over the next 3 or 4 months. That's been the major the focus for this week. In terms of our expectations on interest rates, we did see a bit of a tick up yesterday, but we're still picking that those challenges that the economy has got is going to mean that it's more likely to be early next year before the Reserve Bank starts to make a move and raises the official cash rate.